All right, what's good, y'all? It's your boy Tibby back with another one. So today it's gonna be a real quick video. I just kind of want to break down how I do my top-down analysis whenever I'm getting into the charts each and every day. So yeah, let's just get into it. So I'm gonna just go ahead and remove all these drawings. So like I told y'all before in other videos that I do have this this indicator right here, the ICT sessions one setup for life. That's my go-to when I'm wanting to look out, like, you know, high areas of liquidity. So as you can see with the indicator on, it's going to map out all the session highs and lows. So we got the Asian high and low, London high and low, New York AM high and low, the lunch high and low, and then the PM high and low. So whenever first thing I do whenever I get to the charts is that I'm going to mark out any of these areas that haven't been tapped into yet. So this right here is going to be my New York PM, because I'm going to turn the indicator off. I don't want to have it on while I'm trading because it just gets to be too much whenever you're in your trade. So yeah, I pretty much mark out everything. So I'm gonna go ahead and do that with you guys. I don't have a preset for that one, so let's go ahead and make that real quick. Yeah. Yeah, a lot of these I don't have set up already, so I'm gonna do them while we're here. So so in a instance like this where how we have this New York AM right here, and then we also have a New York AM right here that hasn't been tapped, I'm just gonna put that as liquidity. I'm not gonna specify it as the New York high, New York low, just because it's liquidity. So I just know that these ones, whichever ones are named out, are in the most recent sessions. And then whenever you see like dollar signs like this, it's for it was a previous session that we weren't in, a previous session that we're not in currently. So I just put it as that. So this other indicator that I have is liquidity. So it just kind of lets you know all the sell side and buy side liquidity. But I mean, honestly, if you have the first one, ICT, like that, as you can see, this was buy side liquidity. Boom, we already got that there. They don't have this one marked out as sell side, but they have the lunch low marked out as sell side. And then we also have this other area down here that's marked out as some sell side liquidity. So we can just map them out, and we either going to be using these as targets, or we're just watching them to see what happens whenever price gets to these areas. Because whenever price gets to these areas, we want to see some type of reaction, and depending on that reaction, we know where to execute our trades and what side of the market we're going to be on at that time. All right, so as you can see, this up here was buy side liquidity, but again, that was London from a previous London session. So we're gonna just do the dollar sign just to show that it's liquidity, right? So after I do that, pretty much, I mean, I'll come down here and do these lows also. You just love yeah, that's all good. And then we want to get this this bottom side right here. So we got that sell side liquidity down at the bottom. You can map these ones out too if you want to. But just so you have like a good gauge of, you know, different areas of liquidity, and it'll kind of get your eyes kind of used to seeing these things. So a lot of times you won't even have to use the indicator to find where the liquidity is. And in one of my previous videos, I already showed you guys the times that you want to look for these to map out these highs and lows. All right, so now that we have that done, I'm gonna go ahead and turn off all the indicators. And then at this point, I'm gonna go to higher time frames. So I'm gonna go to like, I'll start all the way at the monthly just to see where we're looking like on the monthly. So as you can see, we have this monthly fair value gap. that was bearish, so we were expecting price to tap into this and continue down lower, but it didn't happen. We're disrespecting that on a monthly, so that kind of lets us know whenever we see things happen on higher time frames, like a monthly, weekly, or a daily chart, those hold a little bit more weight. So this is going to turn into inverse fair value gap. So on lower time frames, you guys hear me say this all the time whenever I'm in my trade, is like, okay, I want to see this candle disrespect the fair value gap, then the next candle I want to see tap into this. So next month, which is pretty much just Monday and Tuesday, so that kind of just gives you an idea of the flow of what you should expect for the markets next, right? So we should expect the next month to trade back within this inverted fair value gap, and then we would want to see some push higher. We might not even get the pull back into the fair value gap, but that's one thing we can anticipate, though, is that we can get a pullback into this fair value gap and then continue our move higher. Just overall, if you're looking at this, like, you know, this was a big sweep of liquidity. We had a huge wick down to the sell side. So we had, they went and swept a whole bunch of orders down here, and we're already, as you can see, we're already continuing in the opposite direction. So this is a good reversal point if we want to look at it like that. But there's a lot of things that can happen from this point. We can either just bounce back and forth and keep and stay range bound for a little bit and just trade all through this area. But what we would like to see, if we're going to be bullish, right? Like I said, we want to see price come back into that, tap into it, find support, and then continue our price, continue our move for higher prices. All right, so yeah, we got that mapped out. I'll just name it so we know exactly what it is. FVG, which is inverted fair value gap. All right, and we might as well turn it green now, since we're expecting it to act as support and for price to go higher and push off of this. So we're gonna treat it as if it was a bullish fair value gap. Now, after I do that, then I go down to the weekly. All right, and then, you know, on the weekly, you're gonna see some other things. So we do have this fair value gap up here. So this is another reason why I think, or why I was saying price could just like consolidate and range back and forth from this point. Because with this, whenever you see this happen, a lot of times you just see it kind of bounce between these fair value gaps, just like hit up here, then come tap down here, and then just kind of keep going back and forth. But it's just good to know where all of these areas are and where price could possibly have some type of reaction, so you can just be prepared and get out if you need to, or, you know, add to your position, or depending on what side of the market you're on. So we're gonna put this as a weekly fair value gap. It's a regular fair value gap. It got tapped into once, but that doesn't mean anything right now. So we just got to see what's gonna happen. So now that I got the weekly, I'm gonna go down to the daily and just doing the same thing, just seeing what's on here, right? So we see there's another fair value gap up above that one that hasn't been touched. So that's gonna be your daily right there. That's our daily, and then this is probably like what, a weekly highs up here. So what I'm gonna type right here is that these are weekly equal highs. And let's look on the monthly, see what that looks like too. And so we'll just know that we'll just put it as weekly / monthly, just so we know that. Usually when you see something like that where it's weekly highs, it's probably gonna be like monthly equal highs too, just because, you know, all of this stuff is fractal. So on smaller time frames, it's just representing more candles from the higher time frame. All right. And then, yeah, so like I said, I go down, I did the dailies, and then I'll even look at the hour, the 4 hour, and then the hourly, because this is going to be more of 4 hour and hourly are going to be more what we would look at on a daily basis, like intraday trading. That's what we will want to kind of focus a little bit more, because again, these are weekly and monthly areas that I mapped out earlier. So on a weekly basis, we would expect. So if we were going to expect price to go higher, this is where I would expect price to get to throughout the week, like by the end of the week or by the end of the month, because this is monthly equal highs too. So it could take a little bit longer. So that's why we have those. One, because like I said, higher time frame areas are very strong. So they hold more weight. You're going to see more reaction at that point. You'll see more movement. Like whenever we get a reaction, you'll see more of a move in one way or the other once we hit those points. So we always want to know where they're at, just in case too. Like, you know, there could be a day you're trading and you had no idea this is the equal highs, and you're trying to get in one way or the other, and you just get, you know, ate up, so to speak, because you didn't know you were at such a high, at a major liquidity level. But yeah, so on the 4 hour, then I'm gonna do the exact same thing. So we had this fair value gap right here on the 4 hour. So if we're expecting bullish pricing, which it looks like what we should be expecting next week, right? It's what I'm kind of assuming, but we'll have to see when the markets open up. I will want to see this get inverted. I will want to see this 4 hour fair value gap get inverted. And if we go down to an hourly, there's multiple fair value gaps down there. So you just kind of have an idea. And we have this liquidity point that's damn near at the 50% of that 4 hour fair value gap. So that's going to hold a lot of weight too, when you see kind of stacked up PD arrays and liquidity points all kind of stacked in one area. Those are good areas, like good draws on liquidity. So we could possibly see price come up to this, you know, get some type of rejection, and then we continue selling off. Because if you look at the sell-off that we had on Thursday, you know, it pretty much came down and took the lows. We got this sweep of the lows, which ended up being the perfect after lunch trade, but we didn't participate in that one. And what's crazy is that when we did trade that morning, we were expecting it to go up and take this PM high. So this is the new PM high that it made, but we were expecting it to take out these equal highs right here. And this green candle pretty much just represents, like, as you can see, it didn't take that out. That's where we were trading. That's pretty much, I was pretty much in the trade on this candle, expecting it to go up and just kind of sweep these equal highs, but it didn't happen. And then what happened instead is that whenever you see failure like that, when you're expecting it to sweep one side and then it fails just short of it, it's safe to say that it's going to the other side to at least sweep that liquidity first. And that's exactly what happened. It came down, swept that liquidity, and then it went and swept those highs that we were expecting to happen. And this was the better move from when we were in here. If we could have just waited a little bit longer, we would have got such a better price, and it would have been a better trade as far as like return on the risk. But you know, you got to take these things. You got to take your money when you can take your money. Like, that's one thing that I'm learning, is getting out of your trades when you need to, just when you're in the profit, and just finding a good area and getting out. And you know, listen to what the charts are telling you. A lot of times I'm stubborn when I see something happen, and I'll stay in the trade. And you know, the main difference between ignorance and being stubborn is, like, you know, when you're ignorant, you don't know. But when you're stubborn, you know, and you still do it. So I've been real stubborn with my execution for a little while. And yeah, just got to start reading these charts. And when it tells me that it doesn't want to go any higher, I just need to go out of it, like to get out of the trade, because it's telling me what it wants to do. And I'm thinking that I know more than the markets, but that's not the case. I have to understand what I've learned and apply it. But yeah, Yeah, like I was saying, that came down for the lunch, it swept the lows, and then the after lunch move was pretty much back to the New York PM high from the previous session. So from Thursday session, it came in Friday, it took out the Thursday session's PM high, and that's what you see happening right there. But other than that, like I was saying, if we want to see price to go higher, we will need to disrespect pretty much this entire area right here. To really feel that way. But if you look at how we ended on Friday, we got some pretty good bullish pressure, right? But again, it was Friday, it was the end of the week, people closing and opening trades. So it's like you can't really give it too much weight. You really got to wait until the market opens up on Monday to see what happens. You might not have any good trades Monday, but then Tuesday comes around. That'll probably be the time for you to trade where you'll be able to find your move. Monday, not hopefully, but what I'm expecting Monday is because, so what I'm expecting Monday is that we probably get a dip back into this green area right here. This should be that weekly or monthly fair value gap that I told you guys about. Let me just make sure. Yeah, so it's the monthly fair value gap. So next week, what we could probably expect to see is some type of tap back into this green area right here, and then we'll see a continuation to the top end. But again, just gotta wait and see, because we've come down here a couple times and swept liquidity, but I just feel we might just get a little bit deeper push right into this area and then continue. But anything can happen, because like I said, the way Thursday played out and we came back down, like we went up there and we rejected hard from this area up here. Because when you see like strong green candles and then matching candles going in the opposite direction, that's kind of letting you know that we're rejected from that area. So there's a couple things to keep in mind. And then whenever the market opens, we definitely want to just stay with the trend, whatever the trend is telling us. If we're bullish like pre-market and it keeps going up, like we just want to wait for a pullback to get in, or vice versa. If we're bearish and the price is just going down, we want to wait for price to pull back, and then that's when we're going to look for our entries. So all the time it doesn't come and hit these areas or these areas of liquidity and go and do what it needs to do, but these are just good areas to kind of keep note of. Because again, like I told you, this could be take profit points, like these could be targets, or they could be areas for you to see some type of reaction to get into your trade. So yeah, right now we're on the 4 hour, like I said. So then I'll go down to the 1 hour, kind of do the same thing. But if I do it on the 4 hour, I probably won't do it on the 1 hour, because the 4 hour will pretty much do the job for the 1 hour fair value gaps, because they're not too far in time. And then there's even the same with like the 15-minute. I'll do the 15-minute in session. I like to pay attention to the 15-minute fair value gaps in session. But if it's something that's out of session, or if I'm looking at like older fair value gaps, I'd rather do higher time frames and not be caught up in trying to pick which fair value gap it is. Because when you do a higher time frame fair value gap, it takes up more of that region, so you can use that as your basis of entry or exit, or waiting for a reaction. Just wait for it to, when it does the higher time frame fair value gaps, you get a little bit better entries, and just you can really see the points of interest a little bit clearer whenever it's the 4 hour fair value gaps or higher time frame fair value gaps. All right, and then the next thing I'm gonna do, like you guys already know, we'll go to Forex Factory, and we just want to see what's going on. So we got some news dropping on Monday. We got the ISM manufacturing PMI. So it's probably going to be a lot of movement. But we also have Powell speaking at 10 a.m. This is 10 a.m. my time. So he'll be speaking at 1 o'clock. So we'll probably be looking for either an AM trade if we can get some movement during the morning, but a lot of times whenever he's speaking, it's usually choppy, like chopping back and forth. But since it's later, like after lunch, we might get more movement during the New York AM and New York AM session, and then we might just have to sit out the PM session. But depending on how long he's talking, if it's a 30-minute, speech where he's going through his information, then we might be able to find something, because I like to wait till after 1:30 to find my trade. So he'll be done. I mean, he starts speaking at 1, so if he's done at 1:30, we might be able to find something that day. But I'll just go ahead and say for now that we probably won't be looking for any after lunch trades. We're probably gonna try and do the morning, because we do have PMI right at 7 or 10 o'clock Eastern time, and I think we might be able to get some movement then, but we just need to be cautious and make sure that we're waiting until after 10 a.m. to place our trade. We don't want to be in anything before this drops. You don't want to be in anything about 2 minutes before or 2 minutes after. And then let's see. Then we got Jolts. Oh yeah, this is going to be one of those weeks where you might get a lot of movement, because we got red folder news every single day. Then we got the non-farm employment change on Wednesday, and also another PMI, services PMI. Thursday, unemployment claims, and then non-farm payroll. So this week's gonna be crazy as far as like red folder news. So it would definitely need to be careful this next week coming up, just from experience. Whenever we have weeks like this, I mean, it could be good or bad, but you just got to be, real tight with everything that you're doing. Make sure you're paying attention to when all this information drops, because you don't want to get caught in it at the wrong time, because you blow accounts on these like weeks like this. You can blow accounts. You get to make a lot of money, or you're going to blow the account. So you just got to find your balance and just understand things that are dropping and pay attention to the time. And, make sure you're using your stops and risk management's on point. And don't get caught up in the FOMO, because, I mean, weeks like this, you'll probably see like really big moves and feel like you're missing out on the trade and hopping in trades, hopping in and out. But that's just not going to be the move. Give yourself about 2-3 attempts at a trade, and then just if you lose all 3, just give it up. Wait for the next day. Save your money. But yeah, I mean, other than that, man, that's probably about it. As far as the top-down analysis, I mean, there's ways you could go a little bit deeper into it, looking at order blocks and everything like that. But I'm still not that versed in order blocks. I really just focus on fair value guys, because it was the easiest thing for me to catch on. So whenever you find whatever is easiest for you to notice on these charts, and it just comes natural to you, you just want to stick with that. Like I've said before, like a lot of people jump strategy to strategy, but that's not going to get you anywhere. You need to stick with the strategy, because it's all about probability. It's like you can't expect your trade to win every single time, or your strategy to hit every single time. You got to understand that there's going to be room for error, and even some of the most perfect setups will go the wrong way, because it's just the way the market is. This is all about probability. So some people look at this as gambling, but everything that I just showed you right now, doing the top-down analysis and kind of understanding where you are, where price is, and where you're expecting it to go, that kind of gives you more of an edge. A lot of times with gambling, it's like a 50-50 chance, but with doing this top-down analysis and finding your edge in the markets, you can get more of an edge. You can get 60-70% edge, so you can win 70% of the time, lose 30%. And as long as your risk management is right, you'll be good. Even if it was 50-50, if your risk management is right, like when I say risk management, is like making sure that you're making more than you're losing, or losing less than what you're making. So if you can make 3,000 in a day, you don't want to lose more than 500 to 1,000 in that day. So whenever you go on a losing streak, your winning days will be able to eat up those losses, and then on top of that, still be able to be profitable and have a little bit extra on top of that. So that's just how you want to look at things. But then that's how you're going to survive in this for the long run. If this is something you're trying to do for the long run, risk management is going to have to be your priority. Psychology is going to have to be your priority. And psychology, when I talk about psychology, I'm talking about, like I told you, how I was being stubborn in trades. That's just bad psychology. Like, I need to understand the markets are telling me one thing and just get out of the market and just take my wins, or take whatever I get, if it's a loss or a win, and take that on the chin and just go to the next, wait for the next day or the next trade. Also for your psychology, not, like I said, the FOMO, fear of missing out, whenever you see big moves and you feel like you just got to jump in to get some money. But 9 times out of 10, it's not going to play out in your favor unless you just know how to trade that way. Then cool. If you got that unlocked, that's on you. But just from my experience, you're just going to end up losing more than you wanted to lose in the first place. Another thing is, like, how earlier up here when I told you about the trade, first thing, how I didn't go to this New York PM high when I was expecting it to. And, I could have stayed in that trade and, sat through all of this. But again, you just got to know to get out the trade and wait for the next trade to present itself. If I would have came back for the afternoon trade that day, I would have had my second trade, which would have given me a better return. But I'm still happy with what I made, because it's $4,000. If you have to look at what you're making too. Like, don't look at what I'm making, look at your life and what works for you. Because that's one thing I think I have a problem with too, is just, I've made so much money trading that's all I want to do. Every day I trade, it needs to be a lot of money. So I'll get discouraged sometimes. Even if I just make 1,000, I'll feel some type of way, or whatever it is. It's like, I want to see double, I want to see five figure trades, like, consistently, but it just doesn't work that way. So if you can switch your mindset to understanding to just take whatever wins you can take and let it all add up at the end of the week, that's what really matters, or the end of the month, or whatever it is. Just understand that and just keep your winners big and your losers small. Yeah, man, that's how you're going to be able to elevate in this game. But yeah, so that's pretty much everything as far as the top-down analysis. I don't know if I missed anything. If I did, I'll definitely come back and make another video and touch on those topics. But I feel like that's a pretty good basis on what I'm looking for on a daily basis, so you guys can understand, even when I'm saying things like fair value gap, the New York PM high, PM low. Like, this gives you an idea of why I'm choosing these areas, because they're high. They're major liquidity areas from previous sessions. Those are always going to be high liquidity areas. And, these fair value gaps are going to be good entry points, or at least a good gauge on the direction of the trade. If they get disrespected or if they're respected, it kind of gives you a little bit more insight on what's going on. But yeah, other than that, man, make sure y'all drop that like, subscribe. Let me know if there's any other videos y'all want me to go over. And yeah, we'll get to it. But I think this will be a good foundation for you guys to start with. I've mentioned it before that I've learned from ICT, Inner Circle Trader. He's on YouTube. He gives all his knowledge for free. And one reason why I really rock with him is, aside from him being real thorough, but with him being real thorough, it can be real boring, because he's saying a lot of stuff that you're probably not going to understand, and his video is like 2 hours long. But the thing about him is his intentions. Like, all those videos that you see him make, he's making those videos for his kids, like for his legacy. So if they ever decide one day they want to come trade, he's already leaving behind all the tools that they need to be successful. And just when you think of that, right, there's so much stuff on the internet that you don't know if they're just trying to get money from you, or if they're just trying to get their views up for their YouTube page, whatever it is. But when somebody has intentions like that, to where you'll see in some of his videos, he's literally acting like he's speaking to his kids. Like, he'll say their names and they're not even there. Like, he'll be like, "You understand me, Cameron?" or whatever it is. But that just shows the intention. And I just feel like you wouldn't lead your kids down the wrong path. So I don't know. You guys understand what I'm trying to say. His intentions are there. So that's why I feel like I gravitate to what he's saying a lot. And I hold on to what he's saying a lot. And, it works, man. Like, I've seen the results already. But if y'all have the time, just check him out. Take your time. Don't try and like run through all his videos because it's not gonna happen. Like that man got like 400 videos and they all, damn near all of them are like an hour long or something. So it'll take you, he tells you to take about a year or two to go through all his videos. I didn't go through all his videos. I'm gonna tell y'all that now, but one day I will go through all his videos. I'll do it piece by piece, but I think if you want to get better at this, you definitely need to check out his page. But yeah, that's it, y'all. Your boy Tibby checking out. Like, subscribe. If y'all got any other questions, let me know. We'll be back at it on Monday morning. Get on here about 9:15. Make sure y'all hit that notification bell so you guys can know whenever I'm up online. And yeah, let's get to it. Y'all have a good night.